I think we're ready to get started for the deep dive this morning. So I just want to say welcome to everybody that's joining, that's on so far, just watching here as folks are on. And, as always, let us know where you're watching from. It's so good to see folks from all over the country joining the deep dive as we get started each morning. So grateful for that. Grateful to have everybody on. It's Monday, December 2nd. And we will get started here in just a moment. Hopefully you can see my screen there. We're going to be talking all about foreclosures this morning. We kind of, talked a little bit about, the number of, consumer debt in this country at the end of the deep dive last week. And we're going to keep up with that and talk a little bit more about it from the foreclosure perspective, because when people see debt rising, and I'm going to talk about that just in a minute, if you miss that, they start to wonder what's going to happen with foreclosures, and certainly that's been a question that many have had. So Caroline, see you there in Chicago, great to have you. Mike, good to have you on. Becky Jean in Western Mass. Bill on Long Island. So many folks that are watching from all over. They get their week started with the deep dive. Hopefully you had a great Thanksgiving weekend, and we're sort of now on the march to the end of the year. I think we have 4 or so deep dives between here and the end of the year, and so looking forward to that. Great to have everybody on. But let's kind of hop in here. The reason we do these deep dives and really everything at Keeping Current Matters is because we believe most agents know what's happening. In today's world, I think that certainly is true. Good agents understand it, but only the great agents can explain what's happening. And I think this is a topic that we need to be able to explain, certainly as we come in contact. We talked about over the last couple of weeks, the number of people that we will see over the next few weeks as we come to holiday gatherings and end of the year parties, all the things that we know that we'll be doing, and probably see more people than we have seen all year long. And these questions are going to come up. And one of the questions, is certainly, hey, what's going on with foreclosures? There's more talk about the economy, more talk about, what's happening with unemployment and inflation. This is no doubt going to happen. Bill McBride said this: with the recent house price increases, some people are worried about a new housing bubble, but mortgage debt isn't a concern, and lending standards are much better than now than during the bubble. So no doubt home prices have gone up dramatically over the last several years. Everybody on the call knows that, and I think has brought that's good news. If you own a home, it's certainly challenging news. If you bad news, if you're trying to buy a home, certainly for first-time home buyers, affordability has been a challenge for folks all over the country. But what Bill is saying here is mortgage debt's not the issue. And I'll kind of go back to what we talked about in the last couple of weeks. It's this graphic, if you remember this. I talked about consumer debt being at a record level. And you see it right down here, broken down by mortgage, which is by the way, the largest piece of consumer debt. Home equity lines, auto loans, credit cards, student loans, all make up this number you see sort of knocking on the door right here of, I'll try to put my cursor there, about $18 trillion in consumer debts, higher than it's ever been before, causes a lot of concern, a lot of questions, which I think are certainly valid. The people say, okay, is this a bad sign? And we need to be able to explain what that means, because mortgage debt is the largest portion of consumer debt. So let's kind of break this down. 13.17 as of the end of the second quarter this year in mortgage debt in this country. It's more than it's ever been before. People sort of look at that and go, gosh, that doesn't sound good, especially if home prices are rising. There's this fear of impending doom. But what we talked about last week is there's over 35 trillion in equity in homes across the country. And I saw, I was watching comments after the deep dive last week, and there was sort of I think a couple of comments or questions about what if people refinance and maybe take cash out of their homes and lower that equity number. I certainly think that could be something that happens. People are always going to leverage equity and resources that they have. But even if you came up with a scenario where, I don't know how much you would need to come up with, but let's say $10 trillion was taken out of home equity by people to live life and pay off debts if they were to come into a significant sort of financial hardship, you'd still be in a very positive situation with equity in this country. So like Bill McBride said, I don't think that that's going to be an issue, and home equity is the sort of the anchor there with everyone. Looking at this comment here, Becky Jean said, "Of clients looking for closures, no question surrounding any bubble or crash." Yeah, I think that's right. I think that more and more people are like, "Hey, when you find these foreclosures, I want to buy them." Right? A lot of people are in buy mode relative to that. I do think there are people that are out there that are wondering, okay, is this market going to crash? Those that are opportunistic and looking for foreclosures may not be in that boat. ICE Mortgage Monitor, they sort of own all of the the point of sale and get all the information when mortgage applications are made. They said equity growth has begun to moderate along with broader home prices in recent months, but that's still the largest volume of equity we've seen on record. The average homeowner now has $319,000 of equity in their home, which is $207,000 could be borrowed against while still maintaining a 20% equity cushion. That's what I was talking about or just a minute ago, about even if folks do pull money out of their homes, they're still in a very, very good situation relative to the amount of sort of cash they have in their home. Rick Sharga said this: for a homeowner in the early stages of foreclosure, that equity helps them avoid foreclosure, either by leveraging the equity to pay down the past due mortgage bills or by selling their property in order to protect the equity they'd otherwise lose at the auction. So this is the point that, if somebody is in trouble, they can sell their home, pay a commission to an agent and put a little bit of money in their pocket as they sort of navigate the financial crisis they're in. There are a couple things that that play into this. What are the numbers of foreclosures, but also what are delinquent mortgages? Where are those rates? And this is from the New York Fed. As of the third quarter of this year, the percent of mortgages that are 90 plus days delinquent. Okay, so you see that number went through the roof back in 08 and 09. This looks all the way back to 2003. Goes through the roof in 08 and 09, and then sort of it's come down since then as people have handled their mortgages very differently, kind of creeping up just a little bit there, but still below 1%, which is very healthy in the market of mortgages. CoreLogic said this: low unemployment numbers have helped reduce the overall delinquency rate as mortgage modification programs have offered those who were in forbearance. So we know about forbearance and what happened there. I didn't do an update in forbearance in this. There's sort of this a lot of, or a few headlines out there that forbearance is rising. Some of that's coming from some of the storms and things like that have come through, and folks have had to say, hey, look, we can't pay right now. But we know the story of forbearance there, but it's bigger. The bigger story is all about the equity position that homeowners have. But even if you think about this low unemployment as of October, 4.1% in this country. In the financial crisis, looking at just over 8%, so still relatively low as it's compared to historically and where we've been in unemployment. So when you start to look at all this, unemployment is still low. Folks in forbearance have an option, and that's a good option, tremendous amount of equity. Adam Data said this: in October of this year, the U.S. housing market experienced a slight uptick in foreclosure activity, with 30,784 property filings for foreclosures, marking a 4% increase from the previous month, but an 11% decrease year over year. This nuanced trend shows foreclosure levels remaining relatively low despite monthly rises. So 4% over the previous year, 11% down from the prior year. Here's what this starts to look like from a graph perspective. And the bottom line is this goes all the way back to 2005. You see the run up in foreclosures in the financial crisis when more than 9 million people were foreclosed on during that time. Excuse me. And where we sit today is a number here that's very, very low for a number of different reasons. The amount of equity, people that have qualified for their home loan, and the number of people that have said, you know what, we're going to do things differently with our equity this time. It's not a situation like we saw in the housing crisis where people refinanced at a cash out refi, went and lived a life, maybe bought things they didn't need, and it ended up very, very poorly for them. And a lot of people saw people get hurt back then and have said, you know what, we're going to do things differently. So I think as we kind of think about explaining this, I would have a couple of these graphics on my phone if anybody does come up and want to talk about or wonder about where foreclosures are, so that you can send those to them, you can show those to them. I think even we talked a minute ago, I can't remember who had the question about clients that are looking for foreclosures. Even showing them this to say foreclosure activity is very, very low doesn't mean that there aren't foreclosures, because there clearly are, but it's not a situation like we saw back in 2008, 9, 10, where there was a massive amount coming to market. And some people, I think, wonder that, and they wonder, okay, coming out of the last couple of years, are we going to see that? Or people not going to be able to afford their homes as we've come out of that? Lawrence Yun said this: a typical homeowner accumulated 147,000 housing wealth in the last 5 years. That number is shocking. Even with the rapid price appreciation of the last few years, the likelihood of a market crash is minimal. Distressed property sales and the number of people defaulting on mortgage payments are both at historical lows. That is a good thing for the market overall. I've talked about, and our KCM team has done an amazing job showing that this is a very, very strong market below the surface. The number of people that have a preferred mortgage rate, the amount of home equity across the country, folks that own a home are in a very, very good situation. Bill McBride said this: the bottom line is there will not be a huge wave of distressed sales following the housing bubble. Most homeowners have significant equity or well qualified to have a mortgage with a low rate that they can afford. The distressed sales during the housing bust led to cascading price declines, and that will not happen this time. So good information there to remember as you're talking to people, explaining where we're at in this. I want to wrap up with this slide right here. If you haven't done this, please take your phone out and scan this QR code. John Burns Consulting, they do a phenomenal job. We've partnered with them to survey agents across the country to say, what are you seeing right now? We take that information and then give it back to you to show you, here's what's sort of happening in the market. You're going to want to be a part of that survey. So grab that and be a part of that as it comes out. You won't do it right now, but when the next one comes up, you'll get an email for that. So I'm going to wrap up the deep dive on that, and grateful for everybody that joins. And hopefully this is the information you need to have in front of you as somebody wonders or starts asking questions about what's happening with foreclosures. We'll see you back next week on the deep dive, and until then, have a great week.